This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning. It's a bright morning. The question is, will we continue with the gains that the market put on yesterday? I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel.
Morning.
And such a different morning from what it was, say, 3 days ago, right? When we were talking about the market falling and levels on the downside. And, you know, in a snapshot, the market has seen a big recovery.
Well, that's right. Markets are looking good, but I think concerns continue with regard to Israel and very, very disturbing images overnight as well. So just hope that there is some de-escalation out there. The markets are in fine fettle, though, so let's see how it goes from here. Absolutely.
You know, the question is, did yesterday's big rise, in a way, at the margin preempt some of the strength that we've seen overnight, right? Because the US market started, especially the bond market started trading for the first time after the weekend clashes only last night. And actually, you know, that's the big question. So, strong day yesterday for both the Nifty and the Bank Nifty. And we did not end the day's high, but not very far away either. So think about it, right? Day before yesterday, the Nifty closed at about 19,650 or so. Sorry, it was, 650 or so was the close. This is day before yesterday on Friday. Then we came back and, you know, day before yesterday, we saw a very sharp cut. That is on Monday. And yesterday, the market recovered Monday's cut and then added another 30, 40 odd points. So we ended about 30, 40 points above where we left off last Friday, which is, I mean, absolutely great news. Now, the big story overnight, and this is something we've highlighted over the last 4-5 trading sessions, is the big fall across the US yield curve. Between 12 and 16 basis point fall across the yield curve. We put out a piece last week on Wednesday, looking at what happens when yields go up 100 basis points in a very short time span. The conclusion was that more often than not, we see between a 30 and 50% retracement. Has that started is the question. And if it has started, there perhaps is more to go, because the rally in the rise in US 10-year yields was 100 basis points. And from the highs, we've only given back about 20 basis points so far in 2 sessions, right? So compared to last Friday's close, the 10-year yield was down 15 basis points. We ended at about 4.66 odd percent. Equities and especially growth stocks, because of that sharp fall in yields, rallied. So the Nasdaq was the outperformer as compared to the other big index, S&P. It ended about 0.6% higher. There was, you know, a Fed speak, which, you know, at the margin was hawkish, and we can talk about that. But I think the broader reinforcement came, and we put this out yesterday during closing as well, the last hour as well, that various Fed presidents are weighing in and asking the question, if bond yields are already so high, and that is the rise has largely been because of you know, term premium rising, which is basically, it's a fiscal impulse, not a monetary impulse, then is another 25 basis point hike really necessary? I mean, should we sort of cap what we've done in terms of rate hikes and be done with it, because market interest rates are higher and they're tightening financial conditions? And that's been the big theme. Dollar index, it sold off a little bit. I mean, 0.25% or so lower. We're at about 105.75. So far cry from the 107 plus kind of levels we were looking at. No further push higher for oil prices as well. We're, you know, just around the $88 a barrel kind of mark. Now, coming to the market here, the Nifty here, we were looking at retracements, but the picture has changed right now. Let's just go with what the market is telling us, that the market is done with the fall and it wants to kind of move higher and build on it. So if you take that setup, then you basically have to look at the fall from the 15th of September high to the 4th of October low, both for the Nifty and the Bank Nifty. And then when you look at those retracements, these are the levels you get. First up is about 19,800. Straight off the bat, the resistance comes in. To be precise, that number is 19,778, which is the 50% retracement of the fall. Ultimately, you need to take out the 19,883 level, which is closer to 19,900. So 19,800 and the 19,900, these are 50 and 61.8% retracements of the fall that we've seen. And I think it's possible that we actually, you know, push towards those levels. Broad support for the Nifty is around the 19,500 levels, which is the low that we saw day before yesterday. Bank Nifty is still not making a higher high, right? And I think that is a problem. The last high was 44,500. We left off at about 44,360. But, I mean, if the Nifty does want to move higher, intermarket divergences kind of resolve themselves and the Bank Nifty will follow Nifty's lead. So the bank index needs to cross 44,757 first. Again, it's a first retracement. The recovery has been weaker, so that's only the 38% retracement. And on the downside, 43,800, which is the low recently, must be respected in case we actually start to get any dips, any sell-offs once again. You know, we have to go with what the market is telling us and maybe take small trades and see if we want to go higher and keep going higher. So that's the reason why, we are putting those levels out, and we've changed the sort of structure in terms of how we are looking at these retracement levels. So the resistances, etc., move higher. But it's not all clear. I mean, it never is all clear. But the point is, later today we will get Fed minutes. But the most important data point this week out of the US, which can change the trajectory for yields once again, is the CPI number, monthly inflation number in the US, but that is only tomorrow. Nothing you can do about it. For now, the GIFT Nifty implied open is about 55 points higher. Sonia.
Absolutely. And, one thing is for sure, right, that the buy on dip strategy that was advocated about last week when we were in the midst of that crisis, that buy on dip strategy is something that has played out beautifully, and that's something that can continue over the next many days. So this is definitely an uptrending market, and you're seeing it in the internals as well. The Nifty, in fact, is up about 250 points from the 4th of October low that we saw of around 19,430. So we've covered quite a bit of ground. And let's not forget that the Nifty is about 2%, just 2.5% away from all-time highs. So the uptrend is intact. The data is suggesting so as well. The big trigger to watch later this evening will be TCS's numbers. They come out post-market hours. There is that buyback as well that will be considered. Remember, in the last quarter, between last quarter and now, the TCS stock is up about 7-odd%. It's almost at a 52-week high. And, there have been strong deal wins from the company. There is expectation of a demand revival. There is expectation that the commentary will be positive as well. So the street might go in positive into these numbers today as well. Keep an eye out on that. The other pocket that everyone has been talking about in the last 24 hours is realty. The Nifty Realty Index, in fact, is at a 15-year high. Very strong real estate updates. And this morning as well, Morgan Stanley put out a report on something like a Phoenix Mills, where they said that the second half of the fiscal is expected to be better than the first half. So the first half was great. Perhaps there could be some more follow-on buying, considering that the second half is expected to be better. All right, on global cues, Prashant summed it up. Very good data coming in. The Dow is up about 130 points. All eyes will now be on the US Producer Price Index that comes out later. And in terms of our own markets, the DI has bought about a little less than 2,000 crores, while FI selling was there, but it was not as bad, about 1,000 crores of FI selling. But give and take everything, this is a very, very strong market, very resilient market. Buy on dip strategy is something that can continue. Of course, if TCS's numbers are half decent and the commentary is very good, that's what the street is awaiting. See, the numbers are expected to be lackluster this time, no great shakes, but it's the commentary that the street will focus on. If that comes through positive, then that will be another trigger to latch onto by the bulls.
Well, that's right. Sonia, I think buy on dips will continue, but I think it could be prudent, given the kind of rally that we've seen from the recent lows, that maybe take some money off the table if we're going to see some bit of a gap up. That could be a strategy that you look at, and you continue to focus on individual stocks as well. And I say this because today is a big day. Post-market hours, you have TCS's results. The stock hasn't been weak, so that's one factor. You'll have to wait by for the commentary. From the United States, you're going to be looking at the Fed minutes as well as the PPI data. And also the Israel conflict, it continues. The sound bites as well coming out of there are still leaving you in a bit of a flux. So, those are the cues out there. So the short point is, I think maybe taking some money off the table, if you get a gap up, would actually be prudent. Now, yesterday, after a while, the Nifty Bank, that was the big point that played out, because that was an outperformer, relative outperformer in comparison to the Nifty. And after a while, actually, we have seen something like that. And the data point showed that there was clear signs of short covering on the Nifty Bank, because it ended higher with a gain of close to 100%, and the open interest was down by more than 10%. On the Nifty, the short covering was a little bit more, little marginal. It was down close to only around 2% the open interest. The big short covering took place on the Nifty Bank, and that perfectly ties in with what the FIs did. They covered close to 5,000 short positions on the index futures, so the short position continues at around 74%. The PCR, remember, it was trending around that 1.05. Now that's moved to around 1.3 because the kind of put writing we saw yesterday. 19,600 put, 19,650 put at the start of the session. The premium on both those two were around 100 to around 120 points odd. So if you just look at those writers, they'll be looking at defending the 19,500 to around 19,520 odd mark. So that's going to be the crucial support zone. On the upside, though, the call writers, after a while, they ran for cover. The Nifty did trend up, and on the 19,800 call, you had some unwinding. Close to around 15 lakh shares did get unwound. So getting to the level straight away, we start closer to around maybe the 20 DMA, which is around 19,770. That's going to be a bit of a resistance zone out there. The 50 DMA on the downside, that'll be a mark that you'll be looking at. But the firm support comes in at around 19,500 odd. On the Nifty Bank, you'll have expiry that will play out today. And the 44,500 call has the highest open interest. The premium is close to around 100 rupees odd. So the congestion zone is around 44,600 to around 44,700. If the Nifty Bank has more in it, then it will help the Nifty. But the important congestion zone is that because the 50 as well as the 100 DMA is in that vicinity itself. The gift Nifty, for starters, going by the cues that we saw overnight, were indicating a 50-60 point gap up. So we'll be starting closer around the 20 DMA. It could be prudent to take some money off the table post the recent bounce that we have seen.
Well, 50, 55 points higher, as you said, Nigel. So we'll see how things open and then proceed from here. We'll take a very quick look at what's lined up here in the first half hour of the show today. Let's get you sort of details from across the globe. Arvind Sanger is our guest of Geosphere Capital Management. He'll discuss the conflict and, of course, his views on the big crash in the 10-year yields, the top 10 stocks of the day with our research team coming up a little later. And at 8:30 this morning, we'll do a fundamental stock check with Devin Choksi of DR Choksi himself.
All right, let's begin the day then with a view coming in from Alexander Redman of CLSA, who posts that in combination, a strong credit impulse, favorable energy pricing, improving external balance dynamics, robust GDP and EPS growth, increasing profitability, a supportive macro outlook, and additional capacity for non-resident asset accumulation will sustain the Indian equity momentum trade into 2024. They have raised the regional allocation for India to a 20% overweight stance. High conviction calls include Reliance Industries, HDFC Bank, ICICI Bank, Bharti Airtel, SBI, Bajaj Finance, L&T, Axis Bank, ONGC, and Tata Motors. So that's a big India upgrade coming in from CLSA this morning.
Well, and we'll kind of sort of go into that note in some detail a little later. Kunal Sudani of Shin and Bank says that the dollar index and yield slipped after Fed's Bostic from Atlanta Fed delivered some dovish words. He said Fed policymakers are worried about rising treasury yields as it could dampen financial conditions. He says all eyes are on the U.S. inflation figures from September and FOMC minutes this week. For the USD INR, he says 83 to a dollar acts as a support, while 83.3 is the immediate resistance.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields rose sharply post the RBI's announcement of the use of OMO sales for liquidity management. He says the market is now waiting for further details on the OMO sales, and depending upon the size and timing, there could be further increase in yields. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.40% this week.
Okay, we have lots of stock-specific action to track today. We'll get to it in just a bit in our special segment. We're looking at Max, Ugro Capital, Religare, Lakshmi Organic, Shiva Cement that are on our radar for the back of positive news flow, and Bank of Baroda, Cipla, Z, Finolex Cables, stocks which are on the radar, and they're likely to open in the red.
Okay, in just a bit, we will be talking to some experts as well. That's a big CLSA upgrade, by the way, that came through where they've increased their India portfolio allocation to 20%. So that's really the big talking point this morning. More on that coming up on the other side of the break. We'll also have a long list of stocks that you can watch out for as we head into a brand new day of trade. Stay with us. Welcome back to Bazaar Morning Call. So we wake up this morning to a lot of positive cues. The Nifty had a very good session yesterday. The global cues are positive this morning. And you have big, triggers like TCS numbers that will come in post-market hours. Our research team is here to give you the list of top 10 stocks as we begin a brand new day of trade. Let's kick it off with Ekta talking about Cipla this morning and why you should keep it on your radar. Ekta, hi.
Thanks for that, Sonia. Well, there is a Mint report indicating that, and CNBC-TV18 has not verified this report independently, that a family rift is clouding the possible $7 billion sale of Cipla. Some family members have questioned the deal pricing of around 1,200 rupees per share and questions on exiting what is an 8-decade-old business. Any sale may take longer than anticipated as per the report, and consensus is yet to emerge within the Hamid family. Third-generation Cipla promoters, apparently, according to the report, are not keen to exit unless there is a substantial premium offered. Sophie Ahmed, who is the sister of YK Hamid as well as MK Hamid, Samina Ahmed, who is the niece of YK Hamid, together own around 7.93% stake, are not in favor of the deal. There was a 2017 family pact which was approved by SEBI, which grants a first right of refusal to all Cipla promoter family members, and that's possibly one of the points of contention, and there could be some delays in the deal as per the Mint report.
All right. Thanks, Ekta, for that. Well, Bank of Baroda should be in focus as well. They've hit a hurdle in terms of onboarding of new customers online. Abhishek is here with details. Abhishek.
Well, Prashant, to begin with, RBI has asked Bank of Baroda to stop onboarding of their customers onto the Bob World. Now, just to alert our viewers, it's a mobile application of Bank of Baroda, which is called the Bob World. So, RBI's action is based on material supervisory concerns that they have observed during onboarding of new customers onto that platform. So, they have directed the bank to ensure that onboarded already customers who are onboarded do not face any disruption on account of this suspension that Bank of Baroda has to do. Bank of Baroda also issued a clarification wherein they mentioned that further onboarding of customers on Bob World will be subject to strengthening of processes. They will work closely with RBI to address the concerns at the earliest. They do not expect this action to have a material impact on the bank's overall business momentum that is there. Just to alert our viewers, different analysts have given the numbers. I've combined all of them. So they have mentioned that via Bob World, Bank of Baroda sources 98% of saving accounts, 91% of current accounts, 58% of fixed deposits, 42% of recurring deposits, 61% of credit cards, and 89% of personal loans. So this disruption can have some impact on Bank of Baroda. Back to you.
Okay, thanks a lot for that, Abhishek. Well, let's hop across to Sudarshan. He continues to remain on top of the MCX story. Sudarshan, morning.
Good morning. Yes, our news break regarding platform's live date is confirmed. MCX has announced October 16 as go live date of the new platform that is being serviced by TCS. And for the same, MCX will conduct mock trading on October 15, in which members can participate, validate setup and connection. Remember, SEBI's technical advisory had approved the shift on Sunday, that was October 8. For reference, I would mention that MCX has the agreement with 63 moons, and they will continue to have till December and use it as a backup if needed. Besides this, CFMA's petition before Madras High Court has been pending for disposal, and that case is likely to be heard on November 29.
Okay, thanks a lot for that, Sudarshan. Well, let's move on and talk about some more stocks that are in the news. Surbhi is here to give us that list. Surbhi, good morning.
Good morning. The first one on my list is Z Entertainment. Now, IDBI trusteeship has filed an appeal in NCLAT against the August 10th NCLT order in the Z-Sony case. The NCLT order on August 10th had approved the Z-Sony merger and dismissed all the lenders' objections. The next is Finolex Cables. Now, this is an ET report. CNBC has not independently verified any of these reports. The legal battle between Prakash and Deepak Chhabria has moved to Supreme Court yet again, where promoter Prakash Chhabria's led organization Orbit Electricals has moved to Supreme Court to challenge the non-disclosure of AGM voting results. Now, Orbit Electricals had got the approval from Supreme Court to vote in the company's AGM on September 29th. In that AGM, the company was going to consider the reappointment of the executive chairman Deepak Chhabria as the whole-time director. But the company did not disclose the results of this resolution, and that's exactly what Orbit Electrical is now challenging in Supreme Court. And lastly, Ugrow Capital is on my radar. They came up with the Q2 business update. AUM was up 73% on a year-on-year basis. The net loan origination was up 34% at 1470 crores, and the collection efficiency improved by 80 basis points on a sequential basis.
Okay, all right. Thanks a lot for that, Surbhi. Well, Vivek joins us to tell us some more stocks in the news. Morning, Vivek.
Well, good morning. Quite a few stocks on our radar on the back of news flow. First on our list, Religare Enterprises. Very interesting report by Mint today morning. What they say is that the board of the company has gone ahead and commissioned an independent valuation report from 2-3 companies, as they believe that the valuation of the company is much more than what the open offer that was given by the Berman family on September 25th actually values the company at. Remember, the Berman family had made an open offer to acquire up to 26% stake in the company at 235 rupees a share, which was at a significant discount to the current market price of September 24th. The next stock on our radar is Lakshmi Organics. The QIP has been closed successfully. The company has raised close to 259 crore at an issue price of 269 rupees per share. Key participants in the QIP, some good names there: ICICI Mutual Funds. Some of the other names include 361 Equity Opportunity Fund. Society General Wealth has participated in this particular QIP. Two other stocks on the radar on the back of operational updates. Cement company NCL Industries, good numbers coming in there. Cement dispatches up 11% on a year-on-year basis. 6.69 lakh metric ton is what the company has managed to dispatch in Q2. Cement boards dispatches up 9%, and the RMC production as well as sales is up 50% on a year-on-year basis. And lastly, Shiva Cement, some very positive news flow coming in over there. The company has received the consent to operate from the State Pollution Control Board, Odisha, so the company can go ahead and increase its capacity, and this particular increase in capacity will take the company's production capacity to 1.5 million tons per annum from the current 0.66 million tons per annum.
All right, thanks a lot for that, Vivek. Here's a quick recap of our top stocks with positive news flow. There's MCX, Ugrow Capital, Religare Enterprises, Lakshmi Organics, NCL Industries and Shiva Cement. While stocks with negative news flow, there's Bank of Baroda, Cipla, Z Entertainment and Finolex Cable. But the other big headline that we've been tracking over the last fortnight or so is the way oil prices have been moving. Brent crude continues to trade around $88 a barrel amidst concerns over potential supply disruptions because of what's happening with the Israel-Hamas war. Let's listen in to what Citi's Ed Moss had to say on the oil market dynamics and the price trajectory.
Nothing at the moment is really changing the supply-demand balance for oil. Well, it leaves us kind of in part at the mercy of financial flows. Financial flows were pretty robust in getting us to the price of $97 Brent. We had a phenomenal increase in that length of managed money. We're looking at a market which is seeing inventories beginning to turn around. They're beginning to grow on a gross basis. We're moving into a refinery turnaround season, which should see crude oil inventories building. We're turning into a season with much lower demand than the summer. August is traditionally the peak demand month of the year, and it turns out that we didn't have much of a gasoline season anyway. So, we think that prices were already coming off faster than we had expected them to. We're looking at prices now that we didn't expect to be here until like the middle of November, based on expected inventory build. So I'd say we're more in a bearish camp now than we might have been had we not seen that price decline.
Okay, well, that's one of the top voices in the commodity space, someone who tracks oil closely. We'll take a quick commercial break here. We'll have Devin Choksi join us in just a bit to talk about some fundamental stock analysis. I mean, what he's liking in the market and, of course, the direction itself. Stay with us. We're back in just a bit.
Welcome back. You're tuned into Bazaar Morning Call. Well, Sudarshan joins us to tell us about some news that he's picking up on Escorts. Sudarshan?
Yes, on August 29, we had reported that Escorts Kubota was looking to sell its railway business. Now we understand that it's almost a done deal. Escorts Kubota is likely to announce the sale of railway business in a few days. In a deal which is expected to be more than rupees 4,000 crore, Escorts Kubota is likely to sell the railway segment to German company Knorr-Bremse Group, which is into manufacturing of brakes and safety-relevant subsystems for rail and commercial vehicles. Both Knorr-Bremse and Escorts Kubota have been major suppliers to Indian Railways. Orders in the recent past have been for Vande Bharat trains. Sources say strategically it fits for Escorts to sell this non-core business of railways to this German company. Another reason that is being looked at for the sale of this segment is Kubota, who is a majority shareholder in the company with more than 53% stake, does not have an exposure to railway segment, and it wants to focus on the core business, that is agri-machinery, or can say tractor business. Now on to the numbers. In FY23, railway business had formed 10% of total revenue of more than rupees 8,200 crore. And in terms of the guidance for FY24 for the order book, which stands at more than rupees 1,000 crore for the railway segment. Regarding the stock performance, it's at record high, and it has jumped more. It has nearly doubled from the 52-week low that it saw in March. CNBC-TV18 has sought comment from Escorts Kubota and Knorr-Bremse. Escorts Kubota is yet to reply, while Knorr-Bremse says, as per the policy, it cannot comment on the specific deal.
All right. Thanks a lot for that very, very important story there. And that has, of course, Sudarshan has been on top of it. And that's the primary reason why the stock has been up and about as well. If they sell their non-core business, which is the railway business, then, of course, they'll get more focus in on the core business, which is tractors. And that's something that shareholders always like. Thanks, Sudarshan, for that. But moving on, earnings season begins as IT bellwether TCS will be reporting their numbers later in the evening, post 5 p.m. And there's also a buyback that we are expecting this time around. Reema's here to tell us what all to expect. Reema, over to you.
Thanks so much for that. So let me start with the numbers. Well, Q2 for the entire industry is going to be muted. There is no deterioration in demand, but it's not that demand has improved significantly in the last 3 months. So for TCS, we're working with a top line growth of about 0.8% in dollar terms and constant currency on a quarter-on-quarter basis. But the focus is going to be on signs and commentary if the worst of the demand deterioration is behind the industry. Now, the narrative in the market is that in FY25, growth is going to recover for the IT industry. For that to happen, we need to see some signs from the management about green shoots, right? If discretionary spending in a small way is coming back to support that thesis of FY25 recovery. And that's what the street is going to be watching from from the IT bellwether TCS. Now, stocks have also run up. TCS, for instance, is up 7.5% in the quarter gone by. It's run up on the back of two reasons. One, expectations of FY25 recovery, and two, strong deal wins. So TCS in this quarter announced an £800 million deal with JLR just towards the close of, the Q1 quarter in June end. They had announced an £840 million deal with Nest. So these deal wins will fuel a strong recovery. Expectation is strong recovery in the second half of the year and FY25. EBIT margins are likely to improve to 23.6%. That's because the prior quarter margins were impacted due to wage hikes. Profits are seen largely flat. What to watch? There'll be 2-3 things that the street will watch. One, demand commentary. 2, changes in the organization restructuring. Under K. Krithivasan, the company had announced some changes in the management structuring. And third, on the buyback. Now, this will be TCS's 5th buyback. The expectation is it will be about an 22,000 kind of a buyback. So details on the buyback will also be very, very important. Back to you.
All right. Thanks a lot, Reema, for that. Well, Deven Choksi is joining in. He's the managing director at DR Choksi FinServe. Deven, as Reema was pointing out, the 5th buyback that TCS is doing, right? But the stock has gained about 7% between last quarter and now, and the commentary is expected to be positive. How are you going into these earnings, and are you optimistic on the stock?
Yes, Sonia, good morning. Well, I think after each of the 5 buybacks that they have done, if you see how the financial engineering has worked on the balance sheet, I think that's pretty interesting. I think every stage after the buyback, I think you are basically seeing the return on cash or the return on capital employed, I think has systematically improved because the low yielding cash is basically given away to shareholders, and in turn, I think the capital is reduced. So both, I think on one side, I think you're bringing down the capital, improving the ratios. On the other side, I think parting with the cash with shareholders, that is also resulting into a better balance sheet picture for the company. And that is where I guess I think this announcement of buyback is basically helping investors to once again take the advantage of the situation. On the fundamental side of the business, I believe that the things are looking, according to me, I think things look, I think, pretty stable for all the top-rung IT companies. Whatever the orders that they've been waiting for, they're systematically seeing at the end of the calendar year the release of these orders, and most likely in the current commentary that in the current quarter that they would probably talk it out. My guess is that I think they'll be having optimistic tone on the release of the new contracts that which they are basically have been waiting for. And the good part of this contract is that most of these contracts are ranging between 5 years to 15 years, and they are some of the bigger contracts. So that gives you the visibility of sustainability on the working of the company as well. I believe that I think Infosys included, both TCS and Infosys, both these companies look reasonably set for a good growth, at least around 15 to 20%, if horizon is for 18 months or so.
Hi, Devin. Good morning. The RBI has prohibited Bank of Baroda to onboard customers on the Bank of Baroda World platform. That's come as a bit of a jolt. What's your view on the stock from here on?
Hi, Nigel. Good morning. Well, on one side, if you look at this particular platform, you find that I think majority of the onboarding activity, including the corporate KYC activity, have been, I think, happening on this platform. At the same time, the collection of the new deposits also have been, I think, systematically been experienced on this platform. So the platform has been working good for them, I believe. But whatever may be the reason for which I think they have to go for the adjustment corrections in the functioning of this platform, I guess I think this is going to have some amount of impact going forward, at least on the efficiency side of collecting the deposits that they otherwise have been collecting so successfully. Not immediately in a position to calculate how much it could have an impact on the CASA ratio, but I would think that I think even if it is, I think it would be bare minimum. It will not be very significant. Maybe in the price correction, if one gets an opportunity, that could be, I think, the time to once again look into it, provided we satisfy ourselves with, I think, the numbers which probably, I think, will carry out today.
Devin, the standout sector yesterday, right, was real estate. So Sobha, Purvankara, smaller names like Ajmera, Prestige, Bombay Dyeing, DLF, Kolte Patil. It was a big 5 to 10% rallies across the board. What's your pick here? And what do you think got the street very excited yesterday?
Hi, Prashant. Good morning. Well, I think continued disposable income in the hands of the consumer is one important factor which is resulting into the demand for housing, particularly the mid-segment and the premium segment housing demand is continuing at this point of time. And the good part is that ahead of festive season, when one is expecting some amount of bookings of the newer properties, which some of the names which you have mentioned, is likely to result into further visibility of next 2 to 3 years. So as it stands today, I guess I think most of the companies are having a visibility of around 15 to 20% kind of a sustained growth, which up till now I think was always questioned in the real estate space, because I think in some quarters you might find the larger amount of deep in the business revenue generation. Here, at least at this point of time, one is finding that the amount of execution which is happening is giving a steady kind of a run rate of around 15 to 20%. So I think that is one thing which we are counting on. But especially yesterday's, I think, rally, a sharper rally. Not too sure, I think, what exactly is structurally changing as far as I think this kind of a sharp rise is concerned. But otherwise, we remain convinced about the inherent growth of the real estate story. And that too, I think, for next 3 to 5 years, I think the visibility is getting established out here.
I do want your thoughts also on a stock like Escorts, because, that stock has run up, 80% in the last 6 months, right? But now we understand that they're getting out of the non-core railway business. You think a lot of the good news is in the price, or are there more synergies of Escorts and Kubota that are yet to play out, which could reflect on the stock?
So yeah, I think it's a good time for Escorts Kubota to basically spell out further synergies now in the business. Having corrected the balance sheet, having corrected some of the non-performing businesses, and I'm trying to get out of the low-yielding business. Most importantly, where exactly I think the larger focus would be from the company's side, I think that needs to come out. On one side, the farm and farm equipment business continues to do well for both Escorts as well as for Mahindra and Mahindra. And I think other side, the infrastructure segment of the business is also significantly putting in newer orders into the company. Given this kind of a situation, I believe that I think they are well positioned at this point of time. But most importantly, Kubota having come into Escort, we'll have to see, I think, what exactly their growth plan is going to be hereafter. One would remain bullish about the possibilities, but I think one would like to get a lot of clarity before which I think one would conclude about, I think, whether the price is justified or not. In my viewpoint, I think the stock price has moved up, of course, but at the same time, it may have the potential to go up further if they announce, I think, further strategy in the infrastructure segment.
Okay, all right. Deven, towards the end of trade yesterday, you had some news that China is looking at again pushing up their economy. Some stimulus could be announced, and that's why you saw the metal index itself did spike up. That was in the last 60 to around 90 minutes approximately. What's your view on some of these stocks? And some of these ferrous names, they suddenly started looking up. You have input costs as well. They're suddenly moving up as well. The steel prices, even in the seasonally weak monsoon season, were quite strong. Your view on the space?
So on one side, Nigel, we are extremely bullish about the possibility of higher demand scenario for the metal sector in general. Because I think both domestically as well as globally, the amount of money which is getting spent on the renewable segment towards the move towards the carbon neutrality, I would think that I think it's a structural change which is happening into the metal commodity per se, where the demand scenario is emerging very, very strong from now on. In India's side, I think one could possibly say that higher amount of capital infrastructure activity going on in the country, the government spending on the capex program on the infrastructure side is also resulting into significantly large amount of demand. The auto, which is a mainstay, is also giving a larger thrust with the higher volume growth. So, like we heard Maruti saying, doubling the size by 2030 of the market, I would think that I think the structural demand for steel is increasing. Ferrous, non-ferrous, both I think is going to be rallying at this point of time as we see. This is an opportunity. If China stabilizes for whatever reason, then it could be an opportunity to buy into this particular sector and probably see how exactly the growth comes in. I'm not saying that I think immediately everything is going to be priced in next couple of quarters, but systematically demand scenario is likely to grow in this particular space. So it's a case for investment given the strong demand and given the stability in the price that we are expecting.
Okay, all right. Deven, stay with us. We'll take a quick commercial break here, but you want to listen into the next thing which is coming up. Nimesh is going to outline the big call from CLSA, which is coming in from the global team this morning. So Nimesh presents that data in terms of what they're saying. So that's coming up, and of course we'll discuss that. Stay with us. A little later after that, of course, we'll also get you Anuj, who will join in for a quick trade setup. Our technical experts will come in with their respective trading ideas. You'll hear from our F&O expert this morning. So a lot lined up here over the next 30 minutes. Stay with us.
All right, welcome back to Bazaar Morning Call. Now, there is a big headline that's coming from CLSA this morning, and we want you to focus on that. It's a major upgrade. CLSA has turned overweight on India and has focused on a lot of stocks. Nimesh is joining us to give us all the details on that in case you missed it. Nimesh, over to you.
Well, what a day to start, right? A big upgrade coming in from CLSA Global Strategists. So what they've done is they've upgraded India to 20% overweight versus a 40% underweight earlier, which means technically a double upgrade. Now, in a note to his client, Alexander Redman, who is a global strategist for CLSA, he's mentioned that, while they've been, contrarian and negative, previously they were a bit negative on the India markets, and that worked really well between late October 2022 to March of 2023. But ultimately, they persisted for too long with their negative view. So that was a call. But now they believe, while there are some concerns, which they've flagged off, but there are 8 key reasons to upgrade India to 20% overweight at this point in time. So let's look at what's working for India in the current favor. So they've highlighted 8 specific reasons which they want to highlight. So the first one is they believe that the credit impulse, signaling a robust equity momentum. That's the first key reason they've upgraded. So the second big reason is they believe that crude is more manageable now given the discounted Russian crude that India is doing. So that's going to be important. Third is improving balance of payment and the fact that the likely bond inflows will support the rupee. So that's going to be a macro big call. In terms of economic growth, they believe that India is seeing the strongest economic growth across all emerging markets, and that's big positive for India. As far as Indian equities are concerned, they're still trading at a fair value, so not very expensive. And at these valuations, they see a further 22% upside from current level, hence they're turning overweight. Also, a return to superior relative performance on most metrics versus the emerging markets. So that's a big call as far as emerging market is concerned. Even from a trend breakout in the EPS growth, which is supported by strong GDP and the revisions as well. So that's a big call from CLS. And then lastly, they believe that the foreign investors do not appear overexposed to the Indian equities yet. So that's a big fact that there could be large inflows coming in from the FIs as well. The 2 key concerns which they've highlighted as well, the 2 big distractions, so to speak, for the Indian equities. One, of course, is the valuation. Compared to the emerging markets, we are relatively much expensive. So that's a big negative. And the fact that RBI is still among the most beholden in central bank in terms of the Fed policy. So these are the 2 big reasons what they're highlighting as big risk. Now, what to buy? That's a big call, right? What are the things to bet on from an India perspective? So they've looked at the screen of high growth names where they have high conviction calls as far as the CLSA analysts are concerned. So I'll just highlight the few names that they have highlighted. The big conviction calls are Reliance Industries, HDFC Bank, ICICI Bank, Bharti Airtel, SBI, Bajaj Finance, L&T, Axis Bank, ONGC and Tata Motors. These are the 10 top names which CLSA is betting on. So a big call from CLSA Global Strategists, a big upgrade on India to 20% overweight versus a 40% underweight which they had an earlier call.
All right, Nimesh, must have gotten a lot of flack from clients, right? For staying underweight for so long.
And for too long they were underweight, right?
Absolutely.
So I think it's a call that
and they accepted. They say that we kind of stayed negative for too long. It worked for a while, but not after March. Thanks very much, Nimesh, for that. That's an interesting call, and we'll continue to dig deeper into that one through the course of the day. Now, let's focus on the Bank of Baroda news flow, right? Negative news flow coming in from BOB. Abhizar Devanji, partner and national leader, financial services at EY India, is joining in. Now, RBI has directed BOB to suspend further onboarding of customers onto the Bob World mobile application. Abhizar, good to have you with us here. Thank you very much. How much will this hurt? Actually, before how much will this hurt, let me ask you, when we see actions like this from the RBI, do they tend to last a while before it's resolved? I mean, what does history tell us? I mean, a few months, a few quarters?
So technically not. Maybe a month max. Because if they've already resolved certain deficiencies that RBI may have highlighted, this may not be such a big issue. So normally what happens is if it's a fraudulent kind of situation or you find a huge gap, sometimes happens in fintechs. And that time I think RBI would put a ban saying that you can't do much more trading. But when you talk about, banks like Bank of Baroda, etc., I think these would be mere procedural kind of gaps in terms of KYC, etc. And I think those will get resolved.
Would the RBI take a step like this without, because there were reports earlier as well which kind of suggested that there were process lapses in terms of getting new customers to boost the numbers. I mean, those were, of course, just reports.
Yeah, so RBI has done this. RBI has done this quite frequently, actually, and hence, it possibly seems to be doing it quite often, even for minor lapses. So, for example, some of the large fintechs like Paytm, etc., have not been allowed to do so. Have not been allowed to onboard customers for a while, and that doesn't help really beyond a point.
Abhi sir, hi, morning. I think the bigger question is, will this have any impact on Bank of Baroda's business? What's your view?
So not really. I don't think, first of all, that the Bob World business is that significant a part of Bank of Baroda's business as yet. So in a way, it is good that something like this get highlighted now, so that when the scale-up comes through, these issues are well taken care of. And, listen, this is a world of fintech or kind of digital lending. We are going to face new things every day. Now AI is coming in. Generative AI is coming in. So will we have some of these procedural issues happening and then resolutions to that? I think it's going to be a game which is going to be, kind of digging the road as we go along. So some of these things will keep happening.
Okay, so you're saying from Bank of Baroda's perspective, there's no impact on the business because this platform is not that huge anyway. Not significant.
Guys, Sonia, Motilal says, I have Motilal this morning, the analyst has written, Abhizar, to you as well, that they say that Bob, they say 98 to 91% of the savings account and current account acquisition, 98% and 91% of savings and current account acquisition is happening through digital channels for BOB. I mean, that is very large. Now, when they say digital channels, I don't know how much is Bob World, but go on.
Yeah, so actually this happens across the banking sector. When you say digitally acquired, it's not that most people open deposit accounts on Digit. What happens is that the feet on street actually goes to the customer with a particular app and enables him to come on the app. That's how it happens.
Correct.
So some of these numbers are actually a bit of a wash. But what's more important to note is that, this is a step towards more and more people getting themselves digitized. So it's a step, it's a journey that one is going through. The actual transactions that actually come online, fully online, are very few for every institution, including Bank of Baroda.
So eventually, sure. Eventually, I mean, for the larger industry, it is a big positive, right? Strengthening of processes is always a good thing. And as you said, as digitization is improving, it's better to put these processes in place at the early stage itself.
Absolutely.
All right. Okay, Abhizar, we'll leave it at that. Thanks a lot for joining in and, giving us a quick word on that. So that's on Bank of Baroda, but that stock continues to remain in focus. Let's get back to the markets now. Anuj is here with us to give us a quick trade setup. Anuj is looking good. Buy on dips is something that has worked. But, we have a couple of big triggers lined up, right? There's TCS later in the evening. How are the markets going to look at that?
Yes, Sonia, absolutely. I think my sense is that the market may have now started a fresh move towards all-time high. And I won't be surprised if you hit an all-time high in October itself. And the reason for that is whenever you make a bottom with the bad news, that normally is a sign for the market that it's going up. And the market's got a real bad news in terms of that conflict. And after that, you saw that big slide in bond yields, which was the trigger for global markets to also revive. And now, what the market has also done is yesterday's high has negated the 3 or 4 negative days of the series, and we have made a fresh high for the series, which is always positive technically. Next level to watch is a 50% retracement zone of the entire fall, which comes in at 19,814 on the Nifty. Maybe we revisit that very soon. On the Nifty, the first support now is 19,650, which is the falling 20-day exponential moving average. Now that we have crossed it, it will be a support instead of resistance. And the bigger support is 19,565, which is yesterday's low. On the upside, the first resistance is 19,766, which is the breakdown zone. And the bigger resistance going by options is 19,833, which also coincides with that 50% retracement zone. If you cross 19,833, another upswing is possible. On the Bank Nifty, where we expected some kind of short covering yesterday, we are very close to some big moving averages. In fact, 3 moving averages are placed within 200 points. 10-day MA at 44,428, the 20-day exponential moving average at 44,529, and the 50-day exponential moving average placed at 44,641. So maybe you want to see if 44,641 is crossed, maybe then that leads to further short covering. On the downside, 2 support levels, 44,270, the 100-day exponential moving average, and the bigger support, of course, 44,004, yesterday's low. But let's see, of course, today's TCS numbers as well. So the market would try to preempt that as well in the last hour of trade.
Okay, all right. Thanks a lot for that, Anuj. Well, let's go across to our technical experts. Mitesh Thakkar joins us on the show. Hi, Mitesh. Good morning. Last couple of sessions have been quite good. If you participated, you'd be sitting on good gains. What do you do this morning? Gift Nifty suggesting a 55-point gap up. Take some money off the table or continue to hold your longs and trail your stop loss?
Morning, Daniel. I think, if you open about 50 points higher, then we would be opening above the pivot level of 19,725. So I think getting past the pivot level with a gap should invite long positions. So if you are carrying long, I won't be, I wouldn't think about taking the money off the table, but I would want to add on to those long positions with a stop below 19,680. So I think that's the way we'll approach it, because my understanding is that if we can sustain about 19,725, then there is a high probability of the Nifty heading towards 19,850, or in a good case scenario, even 19,990 to 20,000 levels. So with that, I think the risk-reward ratio is favorable. While any trade can go wrong at any point in time, but getting past an important level with a gap is always a positive sign, and you should trade with long bias, because there's a higher probability of the trade working in your favor. So that's the way we'll approach it. A gap up opening should invite longs immediately.
Got it. Sudarshan Sukhani is also with us. Sudarshan, is this, the road to new highs? I mean, are we looking at an uptrending market even from here? And what are the levels to watch today?
Yeah, good morning. Well, Sonia, it's never easy to say this is a road to new highs or new lows. What's much easier is that we are in an uptrend and we should stay there. So yesterday, the idea was to go long in the Nifty, and intraday, that would have given 150 points. The market actually rallied during the day, not because of the gap up. Today, again, the view is if you want to carry positions, then stay long. Don't fiddle with your long positions. We can probably see much higher levels as time goes by. I don't think an intraday trade opens up for the day, but for most people, carrying a Nifty position on the long side is worthwhile.
Okay, all right. Good to hear the thoughts on the index, gentlemen. Sudarshan, but tell us, what are the individual stocks?
Yeah, sure. Aditya Birla Fashion is a buying opportunity. Buy with a stop under 215. Bharat Forge is a buy. A very small correction has now probably come to an end. Stop is 1,085 for a buying idea. Then finally, BHL has a small trading range, a very attractive pattern inside that range. I think it's probably going to resume its up move. Buy with a stop under 126. And my fourth is also a buying opportunity, Colgate. It's just coming out of a 3-month trading range. Buy with a stop under 2,000.
Okay, got that. Gentlemen, good morning. Mitesh, what about you? What are your trades?
Morning, Prashant. I also have all 4 calls on the long side. The first one is HDFC AMC. Keep a stop below 27.25. Look for targets of 28.50. Then a buy on Interglobe Aviation or Indigo. That's a buy with a stop below 2473 for a target around 2600. And a buy on NMDC. Disclaimer, this is a part of my portfolio, so I have vested interest. But NMDC is a buy with a stop at 146 for a next target of 160. And finally, a buy on Godrej Properties, which I would recommend buying with a stop at 1694 for targets of 1780.
Okay, got that. Mitesh, before I let you go, and Sudarshan, just a quick word on any of these jewelers and whether we've seen any significant breakouts. Yesterday you had all these Kalyan, Senco, TBZ, except Titan, everything rallied.
So, Prashant, Kalyan is part of my portfolio. So I have vested interest. Yes, there's clearly a positive bias for Kalyan and TBZ. TBZ, I think, if you look at the charts, on the 6th of September, we got a closing high of 121.30, and yesterday was around 121.5. So we are at the previous high. But the setup looks like that the breakout above this high should happen today. Once that happens, I would look at a target of around 145, 150 as a swing trader. And for Kalyan Jewellers, that stock has already made a fresh swing high and now remains a positively biased chart. And as long as it's about 247, I would look for a target of around 300.
All right, let's do one thing. Let's take a short break on that note. We'll come back with the pre-opening rates. Also, we'll have Adidev Chattopadhyay, the Vice President at ICICI Securities. The real estate sector has been booming, and so have the stocks. So we'll talk more about that when we come back.
Welcome back. Hope you're having a good morning. Well, let's get you some F&O trading strategies. Rajesh Palvia, VP Technical and Derivative Research at Axis Securities, joins us on the show. Hi, Rajesh. Good morning. What trades do you have for us? First on the index, and then you could also fill us in with your stock-specific call.
Yeah, good morning, Nigel. So we have seen a short covering action in both the indices. Nifty and Bank Nifty had displayed a short covering in the previous session. Nifty now comfortably holding above 19,650. That is the major supply zone. And we have seen most of the call writers who were active at 19,600, 650 strike have covered their position. And now the call writers have moved their position to 19,800, 19,900 strike. On the other hand, the put writers are now aggressive at 19,500, 19,600 strike. That clearly shows that base is now shifting higher. So till Nifty is holding above 19,600, trend is likely to remain on the buying side only. And we have seen broad-based buying action across all the sector in previous trading session. So we expect that furthermore upside momentum is likely to continue in the today's session also. So to play this upside, we are initiating here to buy a call option of 19,700 strike, which was closed at around 78 rupees. So 78 to 70 is the buying range. One can keep a stop loss of 55, and on the upside we are projecting target of 125 to 130 for this call option, as we are expecting that Nifty may continue furthermore short covering, and possibly we can see a level of 19,800 to 850 in the continuation of this uptrend. On the Bank Nifty is almost now trading near to 44,400. That is very important to watch for in the today's session. If at all, if we hold that level and if we sustain above 44,400, then we may see a short covering action in Bank Nifty, and possibly Bank Nifty can also scale up to the level of 44,650 to 44,800 in the continuation of this pullback. On the downside, one should keep their stop loss at 44,100. On the stock front, we expect real estate space can continue furthermore upside. DLF is looking very promising, very strong buying action in the previous session. We expect that DLF can continue furthermore upside towards 575 to 580. One can buy with stop loss of 548. Another stock that we like at current juncture, that is from Midcap IT, LTTS. Stock managed to give breakout of its previous swing high. Long built up was there in previous session. We are projecting target of 48.60 to 48.80 in the continuation of this uptrend. One can buy with stop loss of 47.40. And the third stock is from metal space, that is NMDC. Very strong buying action in throughout the session. So now looking at the overall structure for NMDC, we expect this momentum can exceed, and 158 to 160 could be the possible target. So NMDC is buy with stop loss of 146.
Got it. All right. Thanks a lot, Rajesh, for that. Have a good day. Well, the pre-opening rates are just kicking in, and it's looking like it's going to be a solid start this morning. The Nifty is up almost 140 points now. The sensex is up about 100 points. And getting very close to that 19,800 mark, led by a lot of heavyweights, ICICI Bank, L&T. It looks like it's, sort of no holds barred for the Nifty this morning after kind of that big move that we saw yesterday. Devin Choksi is still with us. Devin, I wanted your thoughts on HDFC Bank. We're heading into the numbers in less than a week from now, and this will be the first set of numbers of HDFC Bank post the merger announcement. Your thoughts on how to approach it?
I think from the long-term perspective, the view is very clear that the bank is growing at 20% kind of a AUM growth in the books. And this visibility is producing around 3.5, 4 years time. I think that will double the size from current level and hopefully reach in the direction of, I think, 45 lakh to 50 lakh crore AUM in next 4 years time. Given that situation and given the size of India economy and the growth that we are now talking about, one would probably argue that some of the larger banks like HDFC and SBI would eventually have relatively better time because of the sheer amount of growth that they are talking about in the business. In fact, I think this theory is holding true for some of the larger companies who are basically becoming much larger, where we say that I think the big is getting bigger. So HDFC Bank looks, I think, relatively stable from that perspective, gives a good visibility of doubling the size in the portfolio. Maybe in the short term, you might see in couple of quarters some amount of adjustments continuing because of the merger, and that may probably have some slight dent into the profits of the company. If at all not major, I think a smaller dent would be there. I would think that given that kind of a situation, it would be an excellent opportunity because your long-term view is very clear for investing, for doubling the investment in next 4 years' time. So should invest, I think, when the market gives opportunity during this correction. I think this is the time probably to accumulate this stock in the portfolio.
Okay, all right. Devin, thanks a lot for joining in this morning and discussing a whole host of stocks. But let's focus on the sector of yesterday, actually. The Nifty Realty Index had hit a 15-year high. In fact, the index is up close to around 40% this year on the back of strong real estate Q2 business updates. To discuss this, as well as the way ahead, we're joined by Abhidev Chattopadhyay, the Vice President at ICICI Securities, who joins in. Hi, Abhidev. Thanks so much for joining in. Well, it's looking so good, right? The real estate index itself hit a 15-year high, but it's still a far cry away from what we have seen in the peak, I think, of 2008. What's your view on the sector from here on, and what will be your top pick?
Yeah, good morning, Nigel. Thank you for having me on the show. Obviously, as you rightly mentioned, the sector has had a very good run, I think, over the last 6 months. Ever since the concerns on the interest rate cycle, right, maybe the interest rates not going up further from there. I think that is where the sector started to, again, rally. At the same time, even though prior to that, companies were delivering on the numbers. It's not that there was some slowdown. It was more on the perception of a slowdown which may happen. Obviously, that has not been the case, and companies are just going stronger. And consolidation story, which obviously has been playing out for quite a while in the sector, I think that is finally, I think you're seeing that the leading developers, right, whatever launches they're bringing to the market, right, that is being received well by customers. While historically, we have seen prior to that, people are preferring more of ready-to-move-in inventory. But I think that confidence has come back among customers that there are these few developers who can deliver a good product and deliver on time. And that is where you're seeing the residential sales also coming through based on the operational.
Got it. Adhidev, let me ask you that one often asked question, the where are we in the cycle question. What is your sense? We had somebody yesterday who said, well, we are in the second year of a 4-5 year cycle. Do you believe that? And if yes, I mean, what's your view basically? Go on.
Yeah, so see, obviously this sector has now got a listing history, right? For if I take it to 2007, we have almost now 16 to 17 years of some listing history for the sector. And what we have seen in the previous, bull cycles, right? Initially, when the exuberance was there in buying, immediately there was an increase, sharp increase, I would say, in the residential prices, right? That is what happened in 2004 to 2007, and again in 2009 after GFC to 2013, right? Prices almost doubled in many areas. But this time around, what you've seen, I'm just taking the post-COVID time from maybe from FY22 to currently, prices have not gone up very significantly. We are still seeing moderate single-digit, maybe 6 to 7% annual price increases. So I think what has registered well, even with the developer community, is that you try to keep the price hikes in line with the salary or wage hike growth, and focus largely on volumes and execution to drive your cash flows. So I think that learnings, what even developers have, has also played out well around this time. And where are we in the cycle, yet to answer? Yeah, so that's one of the things that price growth, right, has been moderate, but also at a point where it's a sweet spot where buyers are receptive to it. So till this time, this equation works out well for everyone. I think the cycle is, good to go at least for another 3 to 4 years. That is our view.
So I wanted your thoughts particularly on some stocks, right? Adhidev, thanks for joining in. And, we've had this discussion, I think, over the last many years. We've been speaking and trying to understand that how long is this upcycle going to last? So particularly on names like, say, Keystone Realtors, right, Rustom ji, they talked about a 15% growth in their pre-sales in the first half of the year. Can they do better than that in the second half? And what are your thoughts on stocks like this?
Yeah, so if we look at, obviously, traditionally see the second half, right, starting from September onwards, obviously with the Ganesh Chaturthi. Obviously, festive season is the time for launches, and that's where you'll see many of the developers bringing that inventory to the market. So across the board, if you see, it's not just limited to few companies. All companies have got a very large launch pipeline lined up for the second half of this year. Now, obviously, some of these sometimes get pushed back due to some approval delays, we don't know. But given all things, the current scenario for launches, I think all the companies should be able to deliver on their guidance or possibly exceed the guidance which they have for this year. So I think that is a decent enough expectation to carry. And I think, as I mentioned earlier, with rational pricing, volume should also come through for most companies.
Adidev, we've got the entire setup now. You're sounding fairly confident. Various managements as well have sounded quite confident. And the real estate sector seems to have got its mojo back. But our audience will be wanting to know stocks. What are you positive on? The most positive, I mean, if you could give us a couple of buy recommendations that you're officially covering. And also in particular DLF, because yesterday after a while, in the last month or so, it's managed to go to its IPO price of around 525 odd. So your view on that?
Yeah, so see, if you, frankly speaking, see, after the rally we have seen in the last 6 months, right? A lot of our recommendations we have, at least on the larger names, right, are mainly in, I would say, in the neutral zone in terms of absolute buy, not many ideas going around right now, as I said. Although we remain constructive in the sector for the long term, but obviously see this, the exuberance of the sector is reflected in the stock prices to an extent. But if we take, say, a longer view of, let's say, 3 to 4 years, then we do see, again, some meaningful upsides for most companies. This is mainly coming from that whatever project additions which they made, the business development activities, which obviously varies from company to company, which you are not factoring. But on an aggregate basis, stocks we like, even from, I said, from a three view. So we look at a DLF, a macro tech developers, Baroda Realty. And on absolute buy, we have Brigade Enterprises and Shobha Limited is what we prefer currently, based on the current valuations in the sector.
Okay. And what is your price target on Baroda Realty? This year, the stock has done well, but not as well as its peers. Why do you think that is? I mean, what's the reason for the underperformance compared to peers? And what's your target price there?
Yeah, so it is north of 1200, I think, on Baroda Realty over there. I think, see, compared to peers, as I mentioned, a lot of it is launch driven, right? We are seeing the sales numbers being delivered by most of the companies. So overall, obviously, we are awaiting for the large Thana launch, right, in Pokhran Road, and possibly the smaller one in Polshed Road sometime later this year. I think those launches will drive the numbers for the company. So I think it's just, another maybe couple of months away where we'll see that launch coming through. And based on the numbers they are able to deliver, I think the stock could again see some renewed interest. And they have announced a small project, obviously, in South Central Mumbai, and maybe more projects in the pipeline. So I think over the next 6 months, incrementally for Oberoi, as those launches come through, and also as their commercial, the rental properties start, right? The Commerce 3 office in Goregaon and the Borivali Mall, maybe another 2 to 3 quarters, these assets will also start contributing significantly. So all these factors together should see some investors taking some positions maybe in the stock.
All right, Adidev, thanks very much for joining us, and I hope you keep coming back. It's a sector where there is a lot of interest, as one can see. Just one thing, we've not seen many listings in the space, right? Keystone is the last one, or have there been others? Am I missing anything? Lodha is about 3-4 years old. But, I mean, compared to the last cycle, which is 2004, I mean, existing companies were changing their names to ending with real estate.
It's been such a long decadal slowdown for the real estate sector. It's only now, in the last 1 to 2 years, that it's come back in a big way, right?
I mean, but it's been 2-3 years, right? And with the listing boom, markets doing well, one would imagine that maybe we'll see more companies, but...
at least in the Mumbai market, if my memory serves me right, 2003 to 2013, you saw a big spike in prices in the Mumbai market. And from 2014 onwards till 2020,
it was there.
Prices, Nigel and Bombay, are only, I think, last year they've come back to 2013 levels.
Correct. That's the point I'm making. Suppose you were selling a flat in 2013, you said, I'll get a little bit more in 2015. In fact, in 2020, you got the same price.
You were down 50, or actually even down 10-15% in many areas.
I was a prospective buyer, so that's why I'm very happy that I've got my apartment last year at the same price that I could have tried to get it 5-6 years ago.
5-6 years ago. That just speaks about how real estate compares to, say, equities, right? I mean, equities have given you far higher returns compared to real estate.
And that's the opportunity cost if you bought in 2013. But, the point is, if you're going to live in a house, and that's what I believe, if you're going to live in a house, you're not going to check the price of the house every day, right?
Yeah, but I couldn't afford it in 2015.
That's fair. But psychologically, right? I mean, it's always good to see prices, the asset appreciating.
Just one more point. If you want to say India versus China, we are seeing a big revival in the real estate market here.
Yeah.
And China is down in the doldrums with regard to their real estate market. Just want to put that on board, right?
A little bit of Mirchi there. Okay, all right. Let's move on. And there's, I think, about 2 minutes to go for the pre-open, 3 minutes to go for the market opening, actually. The pre-open rates are at the bottom of the screen. It's a decent start, very good start, actually, 80 points higher. But Sonia, TVS Motors is in focus, right?
Yes, it is. So, DAM Capital, they have... I don't know what they're inhaling, because they're coming out with, these reports with very, very aggressive target prices. So I just want to put that on board. They have a big price upgrade on TVS Motor this morning. They raised their target price by 62%, and the target price is now at 3,051. It was 1,875 earlier. And 3,051, by the way, is a huge upside to the current market price. So I don't know whether they've made an error there, but this is in their report. They value the core business at 35 times FY26, and they've added 225 rupees for the subsidiaries. So they've reiterated a buy, and they're saying that there is a big re-rating in store for TVS Motor on the back of increasing margin territory, improving return ratios. It's gradually emerging as a key export engine as well, and the export contribution has doubled. So that's on TVS Motor. But Suntec Realty is the other one, and Sonal is here to give us the latest. Sonal.
Well, we're talking about the real estate space, and Jefferies also is bullish on one of those. That's Suntec Realty, where they have increased the target price of the stock to 555 versus 415 earlier. This is because of their latest partnership with IFC, where they will be creating an affordable and mid-income housing platform, which they call as a booster for the company. Now, 75% of Suntec's portfolio, it is geared to the segment, and growth will accelerate according to Jefferies in this particular segment. That's also because there's a possibility there will be a reintroduction of interest subsidy component of the popular Housing for All scheme, and this is something that the government had been indicating at as well. So they are watching out for that one. Suntec already has a significant mid-income affordable residential focused land bank, and this will also give a governance boost, the partnership with IFC. So that's what Jefferies is bullish on.
All right, thanks a lot. We have about 30 seconds left for the markets to open, so just keep an eye out on that. 80 points higher now on the Nifty. About 19,800 is where the Nifty is going to open at. I mean, 19,760 is what the pre-opening rates are suggesting. And remember, we have good global cues. We have, a lot of triggers in the evening. There's TCS's numbers as well. So the market is going to go into that. But for now, just about 6 seconds left.
So now we're going to repeat yesterday. Yesterday, we opened right into an important resistance. This morning, we're opening right into that resistance as well. So repeat it for yesterday. Let's see.
Okay, let's see how it shapes up, right? For now, the first tick is pretty strong. So 70 points higher on the Nifty. But really, all the action is in the Bank Nifty this morning. The Bank Nifty is up over 200 points. So let's keep it with that. The top gainers are Axis Bank, IndusInd Bank, Kotak Mahindra Bank, SBI. Those are the banks which are batting for the bulls this morning. There's Adani Enterprises, Dr. Reddy's, HDFC Life, Hindalco, Bajaj Finance. There are a couple of other stocks that are in the green this morning. In fact, apart from TCS, surprise, surprise, TCS is in the red ahead of its earnings. There's Powergrid, Maruti, Britannia, a couple of other stocks that are in the red, but barely really flat with a bit of a negative bias there. Otherwise, the Nifty is really strong at the moment, almost gunning for that 19,800 mark. The sensex is up 300 odd points. It's gotten off to the races really for the market, and almost a century in place for the Nifty. Advanced decline ratio also very, very healthy. Lots of stocks picking up pace now.
Well, that's right, Sonia. A few stocks that are particularly coming up on the radar with regard to high volumes. GMDC, that stock is up close to around 4%. Yesterday it was up close to around 20%. Peninsular Land, I remember the stock at around 10, 12, 13 rupees odd. Now it's moving towards 40 rupees. So big up move is what you're seeing on Peninsular Land. IDFC First Bank is another stock that's done pretty well this morning. So that as well opens up with a gain of close to around 2.5% or thereabouts. So that's another one that's moving quite well. On the flip side, as Sonia said, Bank of Baroda, well, that one's down close to 2.5%. That, in fact, is the lone one, actually, that's seeing some pressure. But Tata Chemicals is a stock that's flying away up 3.5%. Vodafone Idea as well up close to around 2.5%. And City Union Bank as well up close to around 2%. We're holding above the 20 DMA 19,770, closer to around that 19,800 mark. The Nifty Bank as well, up close to 300 points. And the Nifty Bank, you wanted to get past this 44,650 to 44,700 odd mark, because that is a bit of a resistance zone. Prashant.
All right. Well, will we see a repeat of yesterday and then will the market keep going is the question. So far, it's too early, but we've got three-digit gains now, 19,790 on the index. Just a few other names before we go any further. So GMDC, I think, was locked up, limit up yesterday, 20%. It's up 3% this morning, and it's the largest volume traded gainer across the board. ITI is coming up on my screen as the second largest volume gainer, 4% there. Tata Chemicals is up about 4% this morning, 3,550 on Tata Chemicals. There is Sunteck Realty. So the first real estate stock coming up on the screen, 5% higher. That was the big gainer. The index was up 4%, the real estate index, that is. GHCL, so soda ash, right? GHCL is a pure play. Tata Chemicals got other stuff as well, but GHCL is up 5%. And I mentioned Tata Chemicals, which is up 3.5%, 4% as well. There is Red Tape, which is up about 4%, 518, 519. What else? Shakti Pumps is up about 2%, above 200 rupees. We put out this Ugro Capital in terms of our top 10 list there, 5% this morning. Stocks are about, 286 right now. And GM Breweries, which I think sold off towards the end yesterday, is pulling back a little bit, but about 1%. But volumes are yet to pick up, so you'll have to give it a little bit more time. And then take a look at things. Kalyan Jewelers is the new one into the mix. I just saw Kalyan appear with volumes. Maybe we can take a look at what that is doing. Jewelers all did very well. And Kalyan, of course, has doubled this year, 3% on Kalyan Jewelers. On the downside, I think Nigel and Sonia mentioned Bank of Baroda, 2.5% lower. And that's a stock we highlighted. We got you that perspective with an expert as well, but it's marginally lower. What else? Sobha is down about 1.5%. Some pullbacks. Prestige is down 1%. These are real estate companies which all went up 5-6% yesterday. 1% kind of drops. But nothing beyond that. I mean, nothing at all. I mean, 0.5%, 0.75%. So nothing really stands out on the downside. Market breadth for now is very strong. 1,700 stocks are higher and less than 200 stocks are lower to begin the day. So still holding with a 100-point gain on the Nifty. Dheeraj Agarwal is now joining us. He's Managing Director at Ambit Asset and Asset Managers. He's in our studios. Dheeraj, good to have you with us here. Thank you very much for your time.
Thanks.
What should we start with? I mean, market's looking good. Looks like it's seeing through some of the troubles that we've had recently, and it wants to head higher. If it had to halt or drop, there's no dearth of triggers and reasons. It is not paying attention to any of that. What's your sense?
Yeah, I mean, it's gone into a phase where it seems like all news is good news, right? So if there is positive news on the fundamentals or economy side, it's obviously positive. If there is a little bit of a negative news on the global side, then the expectation that the rate increases will not happen and maybe the rate cuts will start sooner. And that gives you another bout of positivity. So at this point of time, that's what it appears. In fact, interestingly, if we see last 3 or 4 months, every month we have seen some amount of volatility intra-month. And the base that the market is sort of showing strength at is almost 19,200 or 300 range. So just touches that level and bounces back. So long as that level stays intact, which is the base for the last 3 or 4 months, it's quite possible that market heads into a new high again.
Okay, we're not too far away from that, are we? About 100 points now on the Nifty. It's gaining quite a bit of ground. So this market is less than 3% away from that all-time high that we hit a while ago. Dheeraj, hi, morning. The big sector that everyone will talk about over the next 24 to 48 hours is IT. How are you feeling about IT earnings this time, and how are you positioned on these stocks?
So at this point of time, I don't think IT will disappoint, because after the last quarter numbers, bulk of the weakness for this quarter is already baked in. At the margin, there could be 1 or 2 slight positive surprise, but I don't think there'll be too much of negative surprise from a surprise point of view. Nobody's expecting this quarter to be spectacular for IT. So IT, the whole debate on IT is now moved to FY25. FY24 is a bit weak, which is in the bag. And FY25 outlook or guidance, fortunately or unfortunately, will not come before, let's say, January or February, at least, or maybe even the March quarter. So for now, I think all the negative news in IT is broadly priced in. I don't expect too much of volatility in IT names into the result season, unlike the last one.
All right. Hi, Dheeraj. Good morning. Good to have you in the studio. You've launched a long-short fund as well. How you positioned yourself out there?
So at this point of time, we are long biased. At this point of time in the long-short fund. So as I said, Nifty looks like it took support at 19.2, 19.3. If nothing goes wrong, I think 2,500, 21,000 should be possible in the next 2 or 3 months. So we are positioned accordingly.
That's a very long fund. Long-short fund.
No, we short as well. You
want to give us a rough ratio?
So our stock book is at this point of time about 11 or 12% net long. And so our book is in 2 parts. So we have the stock book and the Nifty book. Nifty is more tactical. And they're completely uncorrelated strategies. So stock book is 11, 12. We might go up to 14, 15. That's about the maximum we plan to go to, although the framework allows us to go to plus 30. But Nifty, we are long, about 50 or 60%. So if you actually add Nifty and stock book both, we are at this point of time about 70% long.
So what is that? What makes up that 13, 14? I mean, you said you go up to 14%. Are you at 14 or a little lower?
No, we're about 11, 12
so
right
what
now.
Makes up that 11%?
In terms of components?
Yeah, because give us a broad idea, because in a market like this, to even find that 11% to go the other way would take some conviction. I mean,
on the short side, even.
Yeah. You really have to dislike something.
See, not really, because actually we see in the last few months, even this year and last year and a half, the dispersion between sectors and stocks is far too high. So if you look at banking as an example, which is my favorite example because it's about 38, 39% of the index. When this year, Kotak and HDFC Bank are negative, they're actually down in absolute terms, not just in outperformance or underperformance terms. Whereas last 3 months itself, PNB is up 25%. So there are opportunities. You're right, trying to make absolute returns from the short book is a little tougher. But one can make a little bit by picking it rightly. So 2 things, 2 key variables which is working in the near term at this point. Markets chasing growth, right? So, and market is willing to take slight amount of additional risk for chasing growth now as compared to, let's say, a few months ago. And in the BFSI space, again, to take that as an example, we see NBFC is doing really well because they're growing the book at 25 to 35% range. Banks beginning to struggle because they're growing the book at 14, 15% range. So this is literally like the pre-2010 market where people used to look at just 2 matrices, which is what is the relative growth either with the market or within a sector, and what's the relative valuation. So this typically happens when retail money becomes dominant force, which is what we are seeing at this point.
Okay. There are some pockets which are coming back in a big way, right? And it's perplexing because it's after almost a decadal slowdown we were discussing that real estate is back and how. But for someone who's perhaps missed this bus entirely, is there still more to go? Is this a structural uptrend?
I think so. So if you see, even if you look at the component of retail credit in the last 1 year, now apart from the unsecured retail credit, which is growing at a very fast clip, 28, 29% YOY, the other segment which is actually growing very strong structurally is home loans, growing at about 17, 18%. So that's one place where we see a bit of a structural demand situation at this point. Not so much from an asset price point of view, but from an actual demand for usage point of view. So it's the current real estate cycle is a little bit different from what we saw in, let's say, 2003 to 7. Where a lot of investment demand was going into real estate, and the real estate prices were rallying at 30, 40, 50% per annum, right? So I heard before I came in, you talking about that you just bought an apartment last year, right? Last year or 2 years ago, but you're planning to buy in 2014.
Yeah.
So I bought mine in 2005.
Lucky guy.
It was really lucky because in 4 years it was 3x.
Yeah.
So by 2005 to 2007 it was 3x. And it's been at the same price ever since.
So all of us have been in the same boat.
So I was lucky to have bought a house at that price.
Yeah.
But as an investment return, it's
nothing.
It's just flattened out, right?
And for someone who's in the equity markets, right, it's painful to see an asset, a clunky asset, not giving you as proportionate returns as equities. So.
True, but at the same time, you need a place to live. And I was a little tired of moving homes every 2 or 3 years because it gets a bit painful.
Just look at other areas, and you feel better. I mean, it's somehow worse off, so it's okay.
Dheeraj, let's get back to some of the domestic cues, though. We'll have a state elections, quite a few that will play out as well. And the markets could be a little jittery out there. Right. What's your view if the outcome isn't, in select states, the current ruling central government? Because 2024, we are betting on Prime Minister Narendra Modi to have continuity and continue with all those policies. Your view?
So two things. One is markets already entered into a volatile phase. It's no longer as linear as what we saw for a few months in between. Just to quote another statistic, in the month of September, while small cap index was up about 2.5 or 2.3%, the median number of stocks within the small cap index actually closed in the red for that month. Even Nifty, last month we saw almost 5% up in the first half of the month and giving back almost 60% of the gains in the second half of the month, closing 2% positive. So the volatility phase has already started, although the trend is up. If you zoom back a little bit and look at the data, YTD Nifty is up only 8.5, right? It's not spectacular. Since Jan of 21, we are up 13 or 14. Again, okay, but not spectacular. Put things in perspective, S&P 500 is also 14% over the same period. So the entire so-called India growth story is at this point of time playing out more in the mid-cap space and small-cap space as compared to the large-cap space. So you're right, events like elections, events like the unfortunate event like what happened in the Middle East this week or over the weekend will make the markets more volatile. And it is certainly a time to be a lot more selective. And the real stock picking skills will now work as compared to just buying anything that you wanted to buy.
Okay, Dheeraj, just before we let you go, actually we have a very interesting discussion lined up with the management of Keystone Realtors in a bit. So and your view on real estate is that there could be a bigger upside from here, correct?
Yeah, more demand perspective. I'm not that positive on the prices galloping the way they did in the previous cycle, but demand is solid.
Okay, I would love you to listen into that discussion as well.
Sure.
We are going to have it in moments from now. So in case you need, you have any questions of your own, you're free to ask the management. So Keystone Realtors is the stock on our radar. Collections have jumped 70% this time at almost 600 crore rupees in Q2. But pre-sales volume and value contracted sharply. For the first half, though, the company has seen almost a 15% growth in their pre-sales, and the company has completed 5 projects with a construction area of 3.1 million square feet, and they remain confident about their guidance for pre-sales growth as well. To discuss this and the demand trends, Baman Irani, who is the Chairman and Managing Director of Keystone Realtors, is with us. Baman, thanks a lot for joining us. As always, it's a pleasure having you here on the channel. I want to start by asking you about what happened in Q2, right? Because if you look at just the quarter, I understand in the first half of the year you've done a growth of 15% in pre-sales, but just in Q2, you've seen a sales decline both quarter on quarter and year on year. Can you tell us what led to this? Is there some moderation in demand that you're noticing? And what is the outlook for the full year?
Quite honestly, thank you, first of all, for having me on the show. The first half of the year has been extremely good. We would have actually galloped a little more, but it's nothing to do with the demand at this moment in time. Our project launch, which was due to be in this quarter, got slightly delayed because of certain approval processes, and we're looking at launching it now. So we will actually more than make up for what we've lost in terms of time. But yes, that is what led to some amount of decrease in our pre-sales in the Q2.
Hi, Baman. Good to have you on the show. Well, the first half of the year, the pre-sales numbers is around 805 crores approximately. And for the year, you were guiding close to around 1,800 crores. So you're telling us the second half of the year will be good enough and you'll hit that 1,800 crore mark?
Let us just see how sales normally take place. This is the quarter in which you will see a huge festive demand coming in. And that will lead to a great amount of sales taking place, not only at our end, but across real estate developments in various parts of the country as well. And we are very, very hopeful that our new launches, which are there in the pipeline, which, like I mentioned, one of them got delayed in this quarter, will have us having an excellent quarter coming ahead of us, as well as the last quarter of the year. Also, we have some interesting launches, which will allow us to kind of hopefully supersede our guidance. Our acquisitions as such, which I should stress upon, we've crossed the guidance for the entire year in the first 6 months itself. And more importantly, Nigel, is the diversity of the acquisitions that we've had. I mentioned previously across time that we try and replenish about 1.5 times of the stock that we are selling in any particular market. And this time our focus is on mid-mass and aspirational. Just to give you an idea, that is between 1 and 7 crore rupee price points, which makes our acquisitions in this first half of the year extremely important and good in keeping with our philosophy of increasing our supply in this market, which is probably the strongest market for Mumbai city, Mumbai and MMR.
Right. Mr. Rani, hi, good morning. Prashant here. We had a real estate analyst with us a little earlier as well. He was saying that while volumes perhaps will be good because builders have found the sweet spot. I mean, they're not being too aggressive with price increases, etc. So things should be good. But just, talk to us about whether, is there a risk of, developers, especially in markets like Mumbai, etc., overdoing it? I mean, I'm not talking about you, but I'm saying, taking on, buying land in anticipation of demand continuing for a while at the same steady level, or you think that is not there? We've seen that in the past. I mean, maybe 10 years, 15 years ago, or you think this time it's different?
So, Prashant, let me first start off by saying that as a developer, your blood group has to be positive, right? Be positive. And that is generally a trend we have seen in the past. I don't have a looking glass to tell you about the future, but yes, you are right. Sometimes the over positivity does get certain amount of developers. But as of today, quite honestly, the demand that at least across all the reports that we have seen, including what your analyst said, has been extremely strong, and the Mumbai market continues to grow because of the requirement of the demand for the upper end of the segment. We've seen premium and super premium sell like never before. People are investing in real estate because of the transparency that the sector has brought. Real estate has always been something that's very interesting for most asset classes. But as of right now, we are seeing a very strong trend of investments in real estate, which was earlier more to a very select group of people. Further, I think across the types of launches that we are undertaking, especially like I mentioned in the mid-mass and the aspirational, again 1 to 7 crore, which all reports will show you, Prashant, are the largest possible market for Mumbai MMR. You will see across the western suburbs our launches coming up. You will see certain key pockets in the eastern suburbs, our launches coming up, and 1 or 2 of the unexplored by recognized real estate developers, markets where the infrastructure growth has taken place at the same point of time are located beautifully on the Mumbai map coming up. And you will see that in the coming quarter with one of the launches that we have planned.
Bowman, just trying to understand what the next 2 to 3 years will look like for the real estate sector in the Mumbai MMR region, right? Because you have so much infrastructure that's coming up, whether it's the Coastal Road project, whether it's the monorail, the Trans Harbour line, etc. Which are the micro markets that will assume importance and will see a disproportionate growth, say over the next 12 to 18 months? And any areas that you're planning to get into?
So thanks for that question. First of all, MMR saw 46% annual rise in housing sales, right? This is primarily because of the fact that the infrastructure boom that has taken place in this city makes us all, as citizens of Mumbai MMR, extremely confident about the future of this market. Secondly, areas where the infrastructure really has had a major demand booster is those locations that are sweetly situated along the coastline. At the same point of time, those that are very, very, well located in the center of the city. I can tell you, if I were looking, and we do look in these areas, Mahi Matunga Dadar will continue to be an extremely strong growing market. And Rustomji has been very, very clear that we will continue to work or grow our footprint in this market. At the same point of time, the western suburbs, because of the proximity to the sea, as well as the national park, the Borivali market, as well as the Malad, Kandivali, Goregaon market, will continue to be a strong growth driver for Rustomji because of the fact that in years to come, we'll have the coastal road reaching all the way up to Versova and then immediately up to Borivali and even beyond. I can tell you if a company needs to look at huge growth, there are fantastic land parcels that one should look at, whether it is the Vasai-Virar region, and I'm talking of 10-year timelines, not 2-3. In the 2-3 year timeline, we should focus more on the western suburbs as well as certain key markets in the center of the city, and that is exactly where Rustomji is strongly focused on. We're also very bullish on the Bandra car market, again driven by the growth of commercial development in Worli at the same point of time in BKC area. Both make it extremely interesting because the commercial development is not only offices, but also a whole lot of lifestyle amenities are coming up in these areas. We've had the mall open up. We're going to have 2 hotels open up. We have an entire new slew of activities coming up with the hospitality as well as with the healthcare segment in this market. So again, Rustomji's strategy is driven more by research, data, and demand prediction in these areas.
Paman, I was listening into your analysis of the entire Mumbai market. I was hoping you'll mention Bandra at some point of time, so I think I'm located at the right place. Towards the fag end, you did mention that. But, everything comes at a price. Demand is good, luxury is selling, very good to hear. What about price increases? Now, we had the management of Prestige Estates a couple of days ago, and they said they'll be happy if prices consolidate at these levels. Obviously, their average ticket as well as their average realizations are much lower than what you're selling at. But what do you believe in terms of price outlooks? How much have you increased prices? And do you think further price increases are there?
No. First of all, price increases is not what we look for because volume is the new, upside that we are looking at. All developers who are worth their salt are looking at better volume growth and better top line growth with maintaining a healthy bottom line. Having said that, Bandra continues to be a very choosy market, and our buyers in Bandra are looking at amenities, quality of lifestyle being created within the building itself. Of course, location continues to play a very important role, and one can never take away from certain key marquee locations, whether it be Mount Mary, whether it be Pali Hill, whether it be Bandstand or Carter Road. These continue to be extremely sought after locations. But overall, the Bandra markets will continue to hold price. They will continue to see good developers and developments coming, leading to a better overall development. And Nigel, as you know, that a whole host of hospitality usually drives growth in a particular area, and we've seen a a new generation of I would say places where one can go across for a great meal and even just like a relaxed evening, leading to the growth in this area.
All right, Baman, we're running out of time a little bit, but if you could tell us, I think your holding is around 86% approximately. You have time to bring down the holding to around 75%. The markets are looking so good, both the stock markets as well as the real estate market. Would you consider, taking some money off the table, diluting some stake and moving towards the 75%? Or do you think there are better times ahead, so you'd rather hold on?
So, we are in the value generation, and at the same point of time, money is the lifeline of our business. At the apt moment when we have the need, we will definitely go ahead and dilute. And yes, I have some runway ahead of me before which I can dilute. At the apt time, of course, we will dilute. I'm not sure about when you say money off the table means secondary, but we are more interested in growing the company. So a larger portion of it will be primary. And like I mentioned, Nigel, it will be more to do with when the opportunity does arise for us to make a largish investment, you will see us coming to the market again.
Okay, all right, Baman, appreciate your thoughts here. Thanks a lot for joining us on CNBC-TV18. All the best. You have a couple of new launches, the projects that you've launched in Virar, Thane, Juhu, Bandra. So, looking forward to all of that coming through and aiding your business. That's the word coming in from Keystone Realtors, a big mover. And, of course, 15% growth is what they announced in their pre-sales in the first half of the year. Let's slip into a quick break. And when we come back from the break, lots more on the market. Sunita Reddy, the Managing Director of Apollo Hospitals, will be with us to discuss their business outlook for FY24.
Welcome back. Markets looking good, 19,800, and we're holding above those levels. And more importantly, the Nifty Bank as well at a very crucial juncture at around that 44,650 odd mark, which brings us to the next conversation we're going to have. Apollo Hospitals is in focus. The company recently acquired a 325-bed that was partly built hospital in Kolkata for around 102 crore rupees. In fact, the hospital's major plan is to increase the bed count to around 2,500 in East India. Ms. Sunita Reddy, the MD of Apollo Hospital, joins us on the show. Hi, ma'am. Morning. Thanks so much for joining in. Well, give us a couple of details. This is a hospital that you've acquired on the East Coast, and you'll have to incur some capex as well. So, on a valuation matrix, on a per bed basis, what does it roughly work out to?
It works up to 1.25 crores per bed.
Okay, all right. And by when do we start seeing this hospital fully operational? And what is the bed capacity and where do you see it headed?
So the hospital will be fully operational in 12 months and full bed capacity will be 325 beds.
Okay, 325 beds and it will be operational in 12 months. There is a big expansion plan. Sunita, hi, good morning and thanks for joining in on the show. There is a plan to expand further in East India. If you could tell us more about that. And any more acquisition plans that you have over the next, say, 12 to 18 months?
So as we look at East India, I think, we have acquired 250 beds in Guwahati in 2 hospitals. But beyond that, we currently have 1,000 beds in Calcutta. So we are looking at possible acquisitions and will continue to do so. But currently, this is what we have for the East. But moving on to the rest of the country, we have a plan to add 2,000 more beds at a capex of 3,000 crores over the next 3 years. So we will be adding 700 new beds every year from the year 24-25.
Ma'am, hi, good morning. How will, over this period, EBITDA per occupied bed grow? I mean, in your assessment, will we see growth? Will we see, that number staying where it is, pretty much staying where it is?
No, of course you'll see growth, and I think if you look at our overall margins, some will deliver better EBITDAs than the others, and as they mature, of course, the EBITDAs improve. So we have a stock of old hospitals and new hospitals. The mature hospitals are trending at an EBITDA margin of almost 30%. The new ones are at currently 19%. So blended, we're around 24.5%. And as you look at EBITDA per bed, we do see that, especially these acquisitions at this cost at 1.5 crores will give you a very strong EBITDA per bed.
What could be the growth we could look at the number, ma'am, over the next, through the course of this expansion?
In terms of EBITDA, I think,
EBITDA, yeah.
So I think EBITDA per bed is currently not the right metric when you're looking at 2 sets of hospitals, mature and new. And I think that, like I said, we look at the EBITDA, the blended EBITDA of the hospital. Having said that, because EBITDA varies from case mix, so the EBITDA per bed for cardiac is currently at 26%. So it varies by specialty, which is why we focus on case mix and payer mix.
All right, Ms. Reddy, we have the management of Healthcare Global who joined us, and they have a PE invested in there. And there are talks that the PE would like to exit. Have you looked at that asset, or do you consider looking at that asset in case the PE wants to exit out there?
Yes, I think, we looked at Healthcare Global before the PE came. And of course, it is a wonderful asset, very good clinical work. Having said that, taking over assets from PEs is not easy because we have a hurdle rate in terms of IRR, which is around 19 to 20%. But we will continue to look at these acquisitions. We have made bolt-on acquisitions, which is why, we're very confident of adding 2,000 beds. And in addition, our oncology vertical is currently at a run rate of 2,000 crores. So in terms of margins, in terms of return on investment, it is above 20%.
But Ms. Reddy, you have looked at this asset in the past. At that point in time, HCG was struggling and they required the money. But now that same asset, the same company is valued at nearly 2.5, 3 times odd. So will you look at it right now? Maybe, in fact, they have improved their financials. They've expanded a lot more as well. If it's on the block, will you have a relook at it?
Certainly we will have a relook at it. But having said that, I do have to say that we have expanded our oncology vertical into almost every city that we're present. So we have to see if there's overlap, whether it's worth paying the amount that a PE investor wants in terms of return.
Okay, got it. Let's talk about Apollo 24/7. I know this is a question that we ask you 24/7, but we can't let it go until the fundraising doesn't happen, right? We're almost at the end of the year, and I think last time you said that by the end of this calendar year is when you will finally raise those funds. Where are we on that front, and what is the quantum that we're looking at?
So if you look at the good things that are happening in 24/7, in the fourth quarter, they will reach operational break-even, which means that the requirement for cash has come down significantly. Having said that, I have always maintained that at the right valuation, we will be able to do a dilution. We do have interest in the stock, but we believe that, at the right valuation, we could do this. So currently, they are very self-sustaining in terms of cash required to grow the business.
So you're saying that at the right valuation, you look to dilute, but earlier I think you were looking to dilute at most 5 to 6% stake in the company. Does that hold even now? Is that the plan?
I think up to 10% at the right valuation. So
up to 10% at the right valuation. And are you still looking to raise about $200 million? Or given that you said that they're self-sustainable, would the amount be lower than that?
It's between 100 million to 200 million, but 200 million is an appropriate figure.
And are we on track to do this by the end of the calendar year, or will it be by the end of the fiscal year?
Let me say that we have an option, and I think more later.
Okay. All right. Option. You have an offer.
We have an option.
Okay, got that. Ma'am, on 24/7, what is the GMV that we should work with for the full year? I think that number was 3,000 crores. Will you meet that? Will you exceed it?
Yes.
What's the latest?
We are on track to exceed that number.
On track to better that number, the 3,000 crore number.
Yes.
Okay.
Okay. Just a final question on the diagnostics business, because you do have, of course, that entire space has seen a lot of competitive intensity, but your own core revenues have picked up. It's almost a 50% growth that you've seen. And earlier you were looking at revenues of 500 crores for the diagnostic business. But given that there is so much competitive intensity, you think it'll be hard to achieve that target? What's the way forward?
No, I think we will achieve that target. And there's also a tariff increase of about 20%. So with that, we will definitely exceed that target.
Okay, target of 500 crores achieved. And discounting, has it stabilized in that space, or is it still very high?
Yes. For AHLL, it is stabilized. Like I said, we've also instituted a price increase of 20%. So 500 crores is very realistic.
Okay, all right, Ms. Reddy, always good speaking to you. Thanks so much for stopping by and filling us in with all those details. And we look forward to having a chat with you post your numbers as well.
Thank you.
Well,
Thank you.
For the time being, before we move on to our special segment, Quarter Se Quarter Tak, just wanted to pull up Gland Pharma. There's a large trade that's taken place out there. I think the more than 5 lakh shares have changed hands. I think that equates to around 0.4-0.5% approximately. So Gland Pharma should be a stock that you should be looking at. Very, very large trade is what we've seen out there. Explains why the stock has suddenly spiked up. But as promised, let's get straight to our Quarter Se Quarter Tak segment. Mangalam is here to tell us through the expectations from the FMCG sector. Mangalam.
Well, it is the FMCG sector which the street anticipates that this time around it will report more of the same as the first quarter itself. Why is that? Well, because demand conditions, while they are steady, they haven't shown a big change. A big growth is expected only in the second half of this year. Low to mid-single-digit volume growth is what most of the street is factoring in. EBITDA margins, they may see some expansion, and that's largely on account of effective raw material cost management and lower raw material prices as well. But you know what the companies have done, right? They've planned to reinvest the savings coming in from these raw materials, the cross margin expansion, into intensifying advertising spends because competitive intensity is high and they need to prop up demand as well. So going forward, monitoring the impact of El Nino and the forthcoming festive season demand is something that will be paramount. We have a cheat sheet for a lot of the sector this time around. From the staples, from the updates that have come by, Marico, their domestic revenues have been lower, largely because edible oil prices have been less. They have low single-digit sort of volume growth, but the EBITDA growth has been in double-digit. As far as Godrej is concerned, the volume growth has come in mid-single-digit, EBITDA margin expansion as well, whereas Dabur has seen operating profits grow absolutely in line with the revenues, which means that the gross margin expansion has been entirely plowed back into advertising itself. So that's about Dabur. But moving on, the discretionary part of the portfolio is doing a lot better. So you do have, names like Titan, you have names like Avenue Supermarts, you have names like Kalyan and Nykaa, all of them doing extremely well. So it was a lot better in discretionary retail itself, with Titan reporting a jewelry revenue growth of 19%, Carrot Lane, the growth driver, growing at 45%, Kalyan Jewellers, their domestic business grew at 32%. We've seen a rub-off on all the other jewelry stocks on account of that as well. D-Mart's standalone revenue grew by around 18.5%, and Nykaa's fashion business has grown in 30s as well. Looking ahead at the street expectations for the second quarter, staples likely to be weak. So we have names like HUL, Asian Paints, as well as Britannia reporting revenues anywhere between 3 to 4% with low double-digit or mid-teen sort of growth coming in terms of their EBITDA. Asian Paints EBITDA is likely to grow by 45%. In terms of revenue growth, only Tata Consumer and Nestle are likely to report near double-digit revenue growth with mid-teens EBITDA growth. Asian Paints, like I said, will stand out in terms of sharp correction in crude prices and a low base, which means the EBITDA grows upwards of 45%. Also important to monitor the results of Colgate, Jyoti Labs, Imami, as well as Bajaj Consumer, as their outcomes may provide valuable insights into strategic shifts within these companies itself. These have been the standout performers of the last couple of quarters. Additionally, let's also remain vigilant for any commentary on shifts in the demand patterns, competitive forces, and the ever-evolving input cost environment. While FMCG stocks have always traded at a steep premium to the market, it's fair to compare them with their 10-year averages. And as compared to that, most of the stocks are trading at a slight premium or largely in line with their 10-year average valuations.
All right, Mangalam, thanks very much for that. Abneesh Roy is Executive Director at Nuvama Institutional Equities. He's joining in. That's a fantastic wrap. Abneesh from Mangalam outlining what expectations are like. As an analyst, when clients ask you, and let me make that even more interesting. If when hedge fund clients ask you what is the best way to play, results, earnings for in that space, the consumer space, what do you tell them? What's the name which stands out?
Yeah, thanks. Definitely this quarter, Nestle, Tata Consumer and Varun Beverages will stand out. These three companies will see double-digit sales growth driven by volume growth and some bit of pricing definitely, and double-digit EBITDA growth. The mid-tier performance will be from a lot of the other companies like Hindustan, Unilever, ITC, Dabur, Colgate, Imami, etc. And muted performance, so essentially weak performance will be from Britannia, Marico, Bajaj Consumer. What we have seen is three things have happened this quarter. One, of course, because of the El Nino, August saw 36% deficit. So rural demand is weaker than urban demand for most of the companies. And we have also seen, for example, urban-focused retailers, for example, see better numbers. So Nykaa, D-Mart, Titan, etc. Kalyan, good numbers. Even for FMCG, second issue has been the festival demand shift, which will come back in Q3. For example, Asian Paints strong margin recovery this quarter, but volumes will be weak. But we expect that in Q3, all paint companies should see double-digit volume and double-digit sales growth definitely. And third, of course, is local players have come back in biscuits, soaps, hair oils, edible oils because of the commodity deflation. So overall, Q2, it's a challenge in terms of demand. Some better recovery we do expect in Q3, Q4. And government stimulus programs because of the elections, that I would say will be a key monitorable. In terms of United Spirits, also the trends will be weaker in Q2 because of the Karnataka impact and festival shift, Adhik Maas, etc.
Abneesh, morning. One of the stocks you're underweight on or you're cautious on is Britannia, as you mentioned. You know, last quarter, the company reported not just a flat volume growth, but they also talked about how local competition has intensified quite a bit for them, and that is what put pressure on their operational performance. Has there been any relief on that front, and what is your target price now on the stock?
No, Britannia, in fact, Q2 will be even weaker than the earlier quarter trends because it's a high base. Plus, we have seen because of the palm oil deflation, local players have come back. They're adding gramme. They're giving a lot of price offs. This is a transitory mode. We would expect Britannia to come back in the Q3, Q4 with better numbers. We have a buy on Britannia from a one-year perspective. But yes, from a Q2 perspective, clearly Britannia will see slight normalization of margins also. In the previous 2-3 quarters, Britannia has seen good margin recovery on YOY basis. Slight recovery will still be there, but now it will be more of a measured improvement in margins. But yes, volumes and sales, Britannia should be muted. High base plus local players impact continues.
All right. Hi, Abneesh. Good morning. What about HUL? You know, that's again going through a phase of relative underperformance. You know, if I look at HUL and say the Nifty or even the FMCG index itself, that's been a relative underperformer. It's gone through these phases in the past and then it bounces back in style. What's the current call at around this 2,500 rupees odd?
So yes, the downside is clearly limited. El Nino impact has definitely made it challenging for most companies. HUL has got 40% salience towards rural, which is on the higher side. We have also seen competition increase in soap, detergent, and in foods. In the Horlicks part of the portfolio, we have also seen demand slowdown continue and inflationary pressure is also there. So currently, we'll prefer Nestle, Tata Consumer, Godrej Consumer, Varun Beverages, Colgate, etc. over a Hindustan Unilever. Hindustan Unilever will be more of a one-year call one would have to take. If El Nino wouldn't have been there and if food would not have again become inflationary, HUL could have played out. But that has become delayed because of these two factors, I would say.
Okay.
Got it. You know, Abneesh, your thoughts on Nykaa specifically, I think you briefly alluded to it. Again, huge underperformer. Is there any sense in looking at this in a constructive way or not yet?
I would say yes, because in Q2, beauty and personal care also did quite well, 19-20% growth. Fashion was the key positive surprise. So what we are seeing is clearly a lot of the other competitors, e-commerce, etc., are focusing on more profitable, sustainable growth. So I would say yes, clearly Q2 is looking good. Now in Q3, sustainability needs to be seen and festival demand should definitely help. This time festival demand has fully shifted to Q3. So I would say that yes, Nykaa looking interesting because of the Q2 update. And that's what is common to a lot of the other retailers in Q2. Urban focused companies have done better. So Titan, Kalyan, DMart, all have actually done a bit better than initial expectation. And that's true for Nykaa also. So Nykaa stock, sustainability remains a question mark. So fashion especially. But yeah, Q2 is a good performance and stock should do well in the near term because of that.
Okay, and now we're heading into festive season as well, right? So Nykaa Fashion perhaps could perk up in terms of sales. Do you track Zomato?
No, that's done by our e-commerce team.
Okay. Any other stocks that you track that you forgot to mention or you want to mention where there is perhaps scope for further growth?
Yeah, I think broader consumption, we continue to like PVR, Z, Sun TV. Those three continue to gain because of the festival advertising spends also, and definitely consumer companies are investing more. United Spirits, although Q2 growth trends will be a bit weak, because of the FTA, UK FTA trade agreement likely at the end of this month, a lot of news flow that UK Prime Minister is coming. I think that will be positive for United Spirits definitely if that deal happens. So that stock should do well if that deal happens.
Okay, and that's going to be a big one if it happens. Thanks very much, Abneesh. Appreciate you joining in and running us through all of that, as always. You know, Lakshmi Organics, by the way, I just want to pull that name up, is a top volume-led gainer now. I don't know if there's any news flow here, but Lakshmi Organics, 9% higher. And look at the volumes on that one. You don't usually see that at all. Suzlon is back to winning ways. It's up 5%. Lots of new names, by the way, into the mix. Suntech Realty is up 5%. These paper stocks have started to perk up. West Coast Paper is up 7%. Andhra Paper is up 10%. So these are newer additions. Idea Forge, after since listing, it's just been one way down. It's up 5%. I was up 7 earlier, but it's perked up a bit. JK Tyre, I think I saw a call this morning from one of the brokers, 7% on JK Tyre. 290 is where that stock is at this point. And there is, Welspun India, Sharda Cropchem. These are in the 7 to 8% kind of gains on some of these names. Tribhuvan Das Zaveri, right? I mean, that's another one which has done very well recently. It's up another 5% this morning. So, yeah, it's a pretty good looking screen. Market breadth is still super solid. And by the way, we are at 19,831. So it looks like a bit of a repeat of yesterday. The market opened right into that resistance level of 19,778. But, it's crossed that and it's sort of kept on going. So this is what we have in terms of the trade at this point. We'll take a quick commercial break here. We are back with more on the other side. So Mitesh will be joining in with fresh trading ideas. Stay tuned.
Welcome back to Corporate Radar on CNBC-TV18. Well, let's get Mitesh Thakkar on board to tell us how to approach the markets now, which, by the way, is looking pretty good. It's a 120-point gain that we're seeing on the index, and the large chunk of it is coming in from the mid-cap space, up about 400-odd points. Mitesh, hi, morning. Your thoughts on how to approach it for the rest of the day, and what are the stocks you're looking at?
Morning, Sonia. I was of the opinion that a gap up should immediately invite long positions, and we are seeing a good follow-through. I think the first target I'm looking at is around 19,850 on this spot, and we've had a high of around 19,832. So maybe around those levels, you would want to take some profits. Trail your stop losses now to about 19,720, and hope that this, rally and up move continues to about levels of 19,980 to about 20,000 levels, and that's where I would want to take more profits. Having said that, on the stock side, I have buy calls. Cummins India has given a good reversal after a correction. Could be starting a new trend on the upside. So that's a buy with a stop below 1730 for targets of 1810. And the other one is Grasim. We have some F&O exposure over here. So disclaimer, there's some vested interest. I would recommend buying Grasim with a stop below 1920 for a target of 2010.
Okay, so two names there from Mitesh coming through, Cummins and Grasim at this point in time. Mitesh, thanks very much. We'll keep coming back to you for more, but let's focus on Bank of Baroda and the setback from in terms of the RBI directive asking them to onboard new customers via the Bob World app. Abhishek is here with more. Abhishek.
Well, RBI has asked Bank of Baroda to stop onboarding of their customers onto the Bob World. The Bob World is actually a mobile application of Bank of Baroda. Now, RBI's action is based on material supervisory concerns that they have observed during the onboarding of customers. So, direct bank to ensure, onboarding customers do not face disruption on account of this suspension that RBI has directed them to do. Now, Bank of Baroda has given a clarification. They say that further onboarding of customers on Bob World will be subject to strengthening of processes. They will work closely with the RBI to address the concerns of RBI at the earliest. They do not expect this action to have a material impact on the bank's overall business. We have certain analysts who have given estimates of, how much this Bob World contributes to the incremental business. So I've collaborated all, and it suggests that 98% of savings accounts, 91% of current accounts, 58% of fixed deposits account, 42% of recurring deposits, 61% of onboarding of credit card customers, as well as 89% of personal loans are given by Bob World. Back to you.
All right, thanks a lot for that. So that is Bank of Baroda. But let's move on to the real estate space, which has been the big mover. Sonal is here to tell us the latest on Sunteck Realty. Sonal, over to you.
Thank you so much for that. Well, Sunteck Realty is higher because Jefferies has increased the target price on the stock to 555 versus 415 earlier. They maintain a buy rating on the stock. They say company's recent tie-up with IFC to create an affordable and mid-housing platform is something which will prove to be a booster because 75% of their portfolio will be geared to this segment, and that's the reason they expect growth to accelerate from here on. A reintroduction is expected of the interest subsidy component of the Popular Housing for All scheme, and there is a likelihood of it getting relaunched, so that would provide some fillip to this segment. Sunteck already has a significant, that is 30 million square feet plus of mid-income and affordable residential focused land bank in the Mumbai metropolitan region, so that will get a boost from that as well. And deal with IFC comes as a governance boost for the company as well. That's something that the street seems to like, and the stock is higher in trade.
All right, thanks very much, Sonal, for that. We'll take a very quick, I think what we'll do is we'll focus on TVS Motors for a quick bit, the big upgrade, right, Sonia?
Yes, there's a big upgrade from DAM Capital, and the upgrade is actually on the stock price, right? So just look at that. They've raised their target price by 62% on TVS Motor. They have a target price of 3,050, which is a huge upside to the current market price. But their rationale is that they value the core business at 35 times. And they've added, so they value the core business at 2,826 rupees, and they've added 225 rupees for subsidiaries. So they've reiterated a buy, and they talk about how there is a big margin boost that they're looking at. They're looking at improving return ratios. TVS Motor is emerging as a very strong export hub and an export engine, rather. And the export contribution for TVS Motor has nearly doubled in the last 5 years, from 16% to about almost 30%, with a compounded volume growth of 13.5%. So that's the rationale. Big export boom coming through and a large target price upgrade. Let's do one thing. Let us take a quick break on that note. On the other side of the break, we will tell you more about the markets, and we'll get you our segment, It's the Economy. Lata will get chatting with Chetan Aya, who is the chief Asia economist at Morgan Stanley, about the impact of rising US yields on Indian and Asian bonds. Stay tuned.